Hey everyone, welcome back. Just a quick sound check and then we can get started. Okay, audio seems to be good on my side. We can get started. Just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay. All right, audio good, video good, everything is good. All right, couple of things to talk about. So you guys probably know this is a really quiet week. We could see extreme volatility in the market. So the Japanese market is actually closed today. So that's for Labor Thanksgiving, and then tomorrow is going to be Thanksgiving, I believe, for the US market. So yeah, it is going to be tomorrow. Thanksgiving tomorrow. I don't live in the US, so I'm not really into Thanksgiving, but I guess a lot of traders are into that, and we could talk a little bit about the equity market and how is that going to affect the sentiment in the market. Basically, when we talk about Thanksgiving coming into play, pretty much a lot of the traders are actually done with the market for the rest of the year. This is what we call the holiday season. I think the equity market will probably experience a possible rally towards Christmas, coming closer to Christmas, but Thanksgiving hits, we consider that holiday seasons in the market. Okay, right, so what's on the table for today? A couple of stuff to talk about. We've got the flash services PMI from the Eurozone, the UK. All of them are actually below 50. A little bit better than what the market was expecting, but it is still below 50. So we are looking at a little bit of a contraction in the economy over there. The US flash services PMI should be coming out soon. We've got the New Zealand RBNZ raising hikes by 75 basis points. So that's up from 3.5% to 4.25%. That's for the New Zealand. We see a little bit of a boost in the New Zealand dollar later on, but that's what it is. And then we have the FOMC meeting minutes, and this is pretty much it. In terms of key data this week, that's pretty much it. Today's going to be it. We only have the FOMC meeting minutes. That's likely going to set the tone for the market potentially going forward until the FOMC rate decision again next month. But what do you expect from the FOMC meeting minutes? It's done and passed. We all know what's we kind of know what's likely on the table. We just need confirmation on whether or not this was actually discussed, and this is part of the meeting minutes from the FOMC this month, right? Keyword to note, it's whether or not they're actually going to slow the pace of the interest rate hike, if they are actually going to slow down a little bit in terms of how big a hike they're going to be doing. If they say, we'll hike 75 this month, and then going forward in the next month, we might slow it down a little bit. That's basically what the market is looking for. If that's going to be the case, then that's going to be all negative. The other thing that needs closer attention to is whether or not the FOMC, in terms of their hiking cycle, whether they're actually at the beginning or towards the end of their hiking cycle. That would be, just give me 1 second. All right, that's basically what the market's going to be looking for in the meeting minutes today, right? Whether or not there's any indication from the FOMC if they're actually still going to be hiking a lot more, if they're really far away from their terminal rates. That's the kind of additional things to watch out for. So two things to look out for, not one thing, two things. Number one is whether or not the word, the exact sentence is going to be mentioned, whether or not they're actually going to slow the pace of interest rate hikes. That's number one. Number two is whether or not they are at the beginning of the rate hike cycles, or they're past the midpoint. That's basically what the market was talking about in terms of whether the FOMC is actually going to pivot. That's basically what it is. Okay, so those are two things that's going to move the market. If one or the other is gonna, sorry, if both of them came out, if but when we say both, if they say they're gonna slow the pace of interest rate hike, that's number one, and then they say that they're past the midpoint way and they do have a terminal rate, that's going to be dollar negative. That's going to slam the US dollar pretty much instantly. So be on the lookout if there's actually those two in there. If one of them is mentioned, I think the slower pace of interest rate hike might be mentioned. If the other one, the FOMC say, there's a lot more room, that they're going to continue hiking no matter what, just to fight inflation, that's where it's going to be a little bit weird, because on one side, we got the FOMC probably slowing down the pace of interest rate hike. On the other hand, if they do mention that they are going to hike interest rate just to fight inflation, that's actually going to be dollar positive. Okay, so don't attribute it as, we've got half of it, the other half is negative, the other half is positive, the market should be flat. It's actually going to be dollar positive today, and now going into the holiday seasons as well, this is going to be the case, likely going to be the case for that. If they don't mention that they're going to slow down the pace of interest rate hike, if they also mention that they're going to continue to go ahead with hiking interest rate to fight inflation, this is again going to be a very, very positive for the US dollar. So we've got three scenarios down. The last scenario is that if they are going to, sorry, it's not really the last scenario. If it's actually part of scenario one. If they say, sorry, yeah, it is the last scenario. If they say that they are not going to slow the pace of interest rate hike, but they do mention that they are past the midway point in terms of the interest rate hike cycles, this is going to be dollar negative. Okay, so I know this is going to be a lot. So yeah, I think if you want to review what I just said again once we're done, then you can get prepared for the FOMC meeting minutes. It's not really a huge deal if we know what we're looking at. All right, we have a couple of projections from the outlook. We did talk a little bit about the potential movement on the pound USD, for example, right, on Monday's webinar. So in terms of how deep a correction it's going to be, we are pretty much within range of support. It's probably good that it doesn't stay below 1.1650, but what this does, it's likely going to create a push higher, but it might not be long lasting. Okay, so we're not really completely done here in terms of are we done with the correction? I think we are kind of waiting for that FOMC meeting minutes. I think post FOMC meeting minutes, you might have a better understanding of what's really going on. Intraday traders, I think we have already seen a market move. I would probably say avoid the US session if you can, unless you have a running positions, and do type it in, and then we can take a look at potential stop losses and target levels. All right, but with the pound USD, nothing much has really changed in terms of the daily outlook. In terms of resistance, we still have 1.2. In terms of support, we still have 1.1750 to 1.1650. That's on the daily, so it's kind of really flat on the daily. But if we jump in onto the hourly time frame, might be able to get a little bit of an indication here. So we don't have that correction. We don't actually have a sustained close below 1.18 on the daily for the pound USD. If on Monday you did actually went short on this one, it was actually a very tight stop loss as well. It was just about 62 pips. So this is done and dusted right now. In terms of momentum, it might be a little bit clearer on Euro USD. But for the pound USD, we would assume that the correction for this week, it's pretty much done at around 78.6%. This is the current projections for the pound USD. We're still below 100%, so it's not really a confirmed thing that this is going to potentially run up to 127.2, but the 127.2% does line up at 1.2%. Sorry, 1.2, not 1.2%. So the 127.2% is actually lined up at 1.2. That's going to be your key resistance to watch out for. It's pretty clear why we're keeping an eye out on 1.2. There was a rejection on the daily time frame at 1.2. So if you are actually long pound USD today, you could potentially aim for 1.2 as your potential target. But I would probably suggest you kind of scale out a little bit at 1.95 just in case. All right, we'll talk about gold in a minute, but let me just finish up with the pound USD. In terms of what should we do with pound USD? So in terms of pound USD, for intraday breakout, I think we've already seen that breakout happen today. So we're already past that 1.19 level. So the breakout levels, let me just highlight it for you, will be there, and this one here a little bit flat, around 1.1865 ish. That's basically the range for the day. It's broken out, so if you do trade the breakout, you probably have gone long on the 15-minute time frame, and in terms of risk reward ratio, you should be scaling out at 1-to-1. Risk reward ratio, you should be done with this trade. You should be getting out of this position right now. Now, there's a lot of uncertainty in terms of the FOMC meeting minutes. We do know to a certain degree that the market is expecting that they're going to slow down the pace of interest rate hike. But what if that is not in the meeting? What if that was only mentioned during the press conference post the FOMC meeting? So that's the thing that the market is looking out for today. I want to see how determined the FOMC is in terms of them and their interest rate hikes. All right, so that's the pound USD. So in terms of intraday potentials for this one, I would find this one to be a little bit hard to navigate. If you do go short on this one, just on the assumption that there might be a resistance at 1.1950, we still got the potential extensions lining up at 1.12. So to give you an illustration, if you're thinking of going short right now, odds are not really in your favor. This is 1.2 in terms of stop losses. In terms of potential projection to the downside, we actually would use the intraday support, which is going to be about 1.1866, right? It's going to give you about 1-to-1 risk reward ratio, but consider this. This is right now above the Ichimoku cloud. Momentum is a little bit weird, so there could be possibility in terms of whether or not there's going to be an intraday correction. We did just saw a breakout on the pound USD. So whatever you're thinking right now, if you are attempting to go short, you are going to be going against the current flow of the market in the short term, right? So that's going to be a little bit tough. If you really need to trade, you should trade it post FOMC. Either trade it 15 minutes after that FOMC meeting minutes is released and everyone kind of digest what it is, but I would really give it about half an hour because we need to go through the FOMC meeting minutes, and a lot of the analysts, economists are going to be looking into that. So you could actually see a whipsaw happen, so it could go in one direction, it could actually reverse if there's actually something new that's being found in the FOMC meeting minutes. So to trade the meeting minutes, sometimes when Fed is on the move, when Fed is really on the go, when they just started hiking rates, the FOMC meeting minutes, it's not really key because we know how aggressive they are. It's just that right now, they've been hiking rates. Are they going to slow down? That's the kind of thing, because right now it could be that midpoint. We don't know if it's going to be this month that we see the pivot, or is it going to be in December that we see the pivot. So there's actually a lot of risk if you intraday trades today, especially on the pound USD. Okay. Moving next up, we'll talk about the Euro USD first, and then we'll talk about gold. For Euro USD, we actually basically look at a potential bounce off 1.0250. Again, if you're paying closer attention to the stochastics as your momentum indicator, I brought this up on Monday. You should be looking at the RSI instead of the stochastics, because the current situation doesn't call for a huge detectable changes in momentum. Number one, we've got less traders in the market this week. It's holiday season. A lot of traders are actually already away. So think about it. In terms of key resistance, we got 1.0350. Key support, we got 1.0250. This is how it looks like on the hourly time frame. We did talk about a few potential scenarios on Monday. We basically could look at a potential correction to the upside. Right now, this is past 61.8%, but it doesn't really stay above that 61.8%. But in all honesty, between this and the pound USD, I think the Euro USD does give you a much stronger bullish signal in the market right now. So this was the range, the estimated range for a potential breakout. This was mentioned on Monday's webinar. So for today, we have transition above the Ichimoku cloud. We do find support at the Kijun Sen. We got the baseline there. We're really off 1.0250. Right now, in terms of potential intraday range, we do have another support coming in at 1.0350. But beyond this, it's basically 1.0450, right? But I look at the scenario here, this still makes a little bit more sense. I'll just bring up the RSI as well, just so you know what we're actually really dealing with here. So for Monday, when it was actually down there, with the RSI, in terms of how we look at the RSI, we're not really looking at the overbought condition or the oversold condition. We're really looking at how strong that one particular trend is going to be. So the range that we are actually paying closer attention to is actually 40.60, right? So on the breakout following this, we actually see the RSI transition above that 60 level. Right now, it's pulling back down a little bit below 60, but it's not really below 40. So the way we look at this is that there could be a potential hidden bullish divergence on the Euro USD on the small time frame. Should we call this a hidden bullish divergence on the hourly time frame? It might be a little bit too early, but this is probably notable if you're trading on a 15-minute time frame. You're not going to pick this up from the daily time frame, but you will pick this up on the hourly time frame. Now, how do you want to trade this? Depends on whether or not you use the RSI or use the stochastics. For the RSI, you basically don't want to see stochastics. Sorry, you don't want to see the RSI goes down below 40. If a RSI transition back above 60, that's going to be your cue to go in for a potential long, and on the price level, that's likely going to break above 1.0350. Okay, so 1.0350 is going to be your key levels to watch out for. In terms of trading this with stochastics, we are good to go because this is already lower than the previous low on the stochastic. So at any given moment, this could continue to go down. Once it crosses up, it doesn't have to go below 20 to cross up, but once it does cross up, would actually classify this as a hidden bullish divergence on the hourly time frame. So that's where we're getting a little bit of an insight into the market on the potential of the FOMC meeting minutes. I think the market is actually weighing a lot more on the potential negative news for the US dollar. If the US, if the FOMC does mention that they're going to slow the pace of interest rate hikes, and that they're actually going to monitor, what they should be doing, or if they say, we've done enough, now we want to keep an eye out on incoming data. They're not going to talk about the latest CPI number because the FOMC meeting minutes was basically written before the CPI numbers, I believe. But in any case, So yeah, I think from looking at the Euro USD, you might be able to get a potential breakout on the Euro USD. You're not going to be able to get that on the Pound USD. We've already seen the Pound USD run off. There's a little bit more room on the Euro USD, and it just makes a little bit more sense because right now you got two options. You could go long right now if you want to. You could have a very, very small stop loss. This is okay if you're an intraday trader. You are looking at around 30 pips of stop loss. I would extend it a little bit towards 40, but you're not really looking at any more than 50 pips in terms of stop loss. 40 is enough. You want to do 50, that's completely enough. In terms of target level, you're likely going to be looking at potential resistance coming in first at 1.0375 once we have that build up in momentum. Right, if it does speed up, if the news is really negative for the US dollar, you might see a little bit of a market spiking up towards 1.0450, 1.04. But let me warn you, because we're heading towards the holiday season in terms of liquidity. There's going to be a lack of liquidity in terms of volatility. Either you're gonna get an exaggerated volatility, or the market's not gonna move at all. Right, I'm leaning towards a potential exaggerated volatility and a lack of liquidity. When we talk about a lack of liquidity, you could really see the spread widen up. Now, if that's going to be the case, that's when you need to adjust for your target levels, just to price in, how big a spread it's going to be. It really depends. Some people would give about 5 pips of an allowance, maybe 10. So instead of aiming for 1.0450, you could probably aim for 1.0440. That's still going to give you an okay risk-reward ratio. It's very close to 1 to 3 risk-reward ratio. So on the Euro USD, that's scenario number 1. Scenario number 2, if you want to wait for that turnaround in the momentum, the RSI might give you a much better view on it, because all the RSI needs is actually just transition on the hourly to above 60. That's likely going to trigger that run. Now, because we're looking at RSI and stochastics, it's going to be a bit tough in terms of determining where that entry is going to be. But if you really want to play it safe, you really might want to wait for a close above 1.0350. If we don't have anything lower than the current low at around 1.03, that could be your stop loss. If there is that breakout above 1.0350, then you are potentially looking at a minimum of 1.04. That's likely going to give you about 1-to-1 risk reward ratio. So in terms of the difference in the market, if you are waiting for that 1.0350, it is around 30 pips. So you could be more patient and wait for that 30 pips to confirm stuff. If that happens post FOMC meeting minutes release, then that's going to be okay. If we can digest that the information is going to be bad for the US dollar, then it's okay. Then you can actually aim higher towards 1.0450, 1.05. But if you want to jump in right now, momentum is not quite on your side yet. So if you jump in right now at this hour, it's going to be too early for you to jump in. Now, because we only have about 4.5 hours towards that FOMC meeting minutes, this is where I say I would avoid this if you don't understand what you're doing. If you understand what you are expecting from the FOMC meeting minutes, then it's fine for you to take a position if you want to, but know the risk, know the potential volatility, know the potential lack of liquidity in the market. But if you're thinking, there must be something technical on it, you're a bit too early. If you just assume that, I think we should just make a trade right now, you're going to be too early for that FOMC meeting minutes. Results from the UK budgeting, it's already out, but we're still looking in depth into what it is and how the impact is. But I think we are looking at what the threshold is for the tax, the interest. The income tax on the upper threshold. We're still looking into that. I'm still looking into that. I don't know if other people came up with it or anything like that, but we're still combing through the UK budget, so we don't really have anything solid. But from the initial market reaction, it's pretty lukewarm. So market it's like, it's It's not bad, but it's not really boosting any confidence or anything like that instantly. It might trickle in a little bit, but so far there hasn't been any political backlash, so we are assuming that it's going to be okay. Not we, I am assuming it's going to be okay. In terms of how we translate this into the fundamentals and how the whole CPI plays out, again, this is going to be tough because we are moving into the end of the year. Okay, so that's the Euro USD. My take on the Euro USD is that it might have a higher probability of being bullish, but again, really dependent on whether or not it's actually going to break above 1.0350, whether or not the FOMC meeting minutes is actually going to be dovish. All right, that's the word for it. Am I seeing the hidden bearish divergence on the pound USD on the hourly time frame? Let me just double check that. You mean this one here? Sorry, not that. Right. So this is where I'm actually reluctant to call this a divergence, because technically if we look at the whole movement on where this actually appears, if the pound USD was somewhere around 1.2, then yeah, I would classify that as a divergence. The thing right now is that it actually hasn't exceeded this high, which is at the 100% level, which is at 1.1950. So because it doesn't exceed 1.1950, and if we zoom out a little bit and take a look at the whole movement on the pound USD, you can kind of still box it in a rectangle for the pound USD. So we would assume that you don't have to take the highest high, but basically this is, you can shrink it if you want to, but this is still in a rectangle. We don't actually have a determined range on, we don't actually have a determined trend on the hourly time frame. So this is where I'm actually reluctant to classify this as a bearish divergence. Also, if we take a look at the RSI just to confirm if there's actually that bearish divergence, we're not noting that on the RSI. The RSI is still normal, moving according to price. Now, if there's going to be a divergence, the first thing that's going to detect it is actually the RSI. So when you want to confirm it, this is probably where you pull out the RSI to compare with the stochastics. But yeah, stochastics, as I mentioned on Monday, I don't know if you guys were here on Monday, but let me just phrase this for you guys that just jump in on Wednesday session. If you want to know how to get into Monday session, you actually need to be part of the Telegram channel to get the link for that Monday session. But in any case, right now it's not really quite okay to use stochastics. Year end, when we come into holiday seasons, or we know that most traders are actually going to be going away, especially close to the Christmas, Thanksgiving. It's basically the key mark there. Past Thanksgiving is it's basically the holiday seasons. Or during the summer break, it's not really that bad. It's not really that bad during the summer breaks. It used to be really worse, depending on what what asset you're trading in. But year end, I think a lot of people are just going to be pretty much done with the market. If they made their gains this year, they're likely going to be done for November. Okay. So what's left in the market? It's probably not 100% full force, right? We're probably looking at around 80% of active markets. That's where the stochastics can be a little bit funny. So I would really suggest right now to switch gear a little bit into the RSI, right? If you are wondering how to actually use the RSI, actually go in depth on that on the first webinar series. This is, I think, about 10 weeks back. But you can search Understanding Momentum and Volatility in the Market on Octa FX YouTube channel, and you should be directed to that video. Go take a look at that. That's basically how we want to look at the market, especially this week and potentially even next week, leading up into December as well. All right. How do you join the Telegram channel? All you need to do is contact customer service. They'll be able to give you the link and point you in the right direction. Okay, so just to double check on the divergence, the RSI is not detecting it. Number two, It's overall on the pound USD on the hourly time frame is actually still within a rectangle. It's actually flat sideways market, so we don't actually classify this as a bearish divergence. Okay, so just something to watch out for. Liquid gold, yes. Let's talk about liquid gold. So this was actually discussed on the channel as well. Well, let's take a look at gold first. I think there was a request on gold. Someone was asking about head and shoulder on gold. I think this was last week, I believe. No, it was actually on Monday. Someone actually mentioned a potential. Was it last? No, it was pretty much Monday. Yeah, I'm pretty sure it was Monday when we talked about this. So on the daily, there's actually a head and shoulder on the daily for gold. In terms of how far gold could move down, the projected target is basically the shoulder line to head, and that's basically the range that we identify as your potential target, which is around 30 bucks. Right, give a take. You can go for 30 bucks, you can go for 27, but the initial entry was basically here. Your stop loss was up here around 1767. If you are in that trade, maybe you should move your stop loss to break even. But if you are thinking, you know what should we do on this one here in terms of gold, in terms of potential pullback, we're not really seeing any gains on gold at this point in time, unlike the pound USD or the euro USD. So in terms of potential support that we have on gold, we will be looking around 1725 to 1723 to about 1700. That's basically the previous range of resistance, support and resistances on gold, and that's basically a key pointer for gold in the near term. If you're looking at it from the hourly perspective, we're still below the Ichimoku cloud, so this is actually still in play, but it is closer to that potential target. If you're thinking, you know what, if it does point down lower, should we go in short on this one? You could. You got a couple of stop losses. You can have your stop loss at about 1745 or maybe a little bit higher at around 1750. In terms of target level, it should be adjusted equally towards the daily target. That would give you a risk reward ratio of about 1.15, so about 1 to 1. That's pretty much it. This is that. If you want to jump in and you want to go through with the daily, it's just that it doesn't click in a sense that the daily stop loss is going to be up there. So there's actually potential. It does give the market room to move. So if you jump in on the hourly time frame, then you need to adjust your stop loss a little bit lower. Okay, so you're definitely not gonna be jumping on this kind of trade on the hourly time frame, having it on this daily stop loss. So you'll be looking at a smaller stop losses. That's going to be about 1750. Momentum still points to the downside. Prices below Tenkan, below Kijun. Stochastic still points to the downside. So we could see a potential move to the downside. We just don't know how far it's actually going to go. So we got a few projections, which is going to be about 1723. That's likely going to be about 1725, right? If you want to go for an intraday target on gold, it's going to be 1 to 1. Okay. All right. So that's gold. Let me go through the questions first. Selling in class A divergence. I think we are identifying the same thing on the pound USD as well. On the selling yen. With sterling yen, it's pretty much done, right? We were only aiming for about 168. Next up was about 169. Let me go through the RSI just to double check if we do have that divergence. So the RSI doesn't pick it up. In terms of stochastics, do you want to classify this as a divergence, a class A divergence? Not yet, because stochastics still above 80, and this could still create a higher high on the stochastics. So this is going to be too early to call this a class A divergence on sterling yen. All right. Gold, I gave you that idea. dollar yen, dollar cat, why is it not hitting divergence on the daily? We'll talk about all in a minute, but let me go through the questions one by one. Let's take a look at dollar cat because I already know what it is on the dollar yen. Right. On the daily, why is it not hitting divergence on the daily? A hidden bullish divergence on the daily? Is that what you're saying? So I think with the okay, could it be a hidden bearish divergence on the daily? Logically, let me compare it on the timeline. So at that point in time, we have a lower low. This point in time, we have a lower low as well. That's in line with what the stochastics is. So for a hidden bullish divergence, price needs to create a higher low. So price actually needs to maintain that kind of position. This is actually in line. We're not looking at any divergences in the market because if we take a comparison on the lows here, that would probably be that low. We're still looking at lower low, lower low. So there is no hidden divergence on dollar cat on the daily. Okay, so we're not actually detecting any divergence on the dollar cat on the daily as well. In terms of momentum and stuff like that, think about it. This is actually within the Ichimoku cloud. Momentum could pick up. Price might not go anywhere. In terms of key support, we still have that 1.32. Those that went short on dollar cat to trade the head and shoulder. This is pretty much the same scenario as what we take a look at on gold, but this is within the Ichimoku cloud. I would consider this trade to be done. So that's pretty much it. In terms of potential resistance, right now we do have 1.35. If there's no daily close above 1.35, then we could actually see a rejection back at the previous neckline. Then that's where you want to go in short again. Potential target still goes at 1.32. Now, in terms of the momentum here, this one goes up. Is it, this could go up really high and price might not go anywhere. So keep that in mind. Also, right now, this is also very easy to break below the Ichimoku cloud, just like so, because we actually do have price pulling back to that neckline on Monday, right? So if today's data is dollar negative, we could easily transition below the Ichimoku cloud on the daily for the dollar Canadian. Now, for the dollar yen, we have several potential scenarios here. I think on the outlook I did mention this. We might actually see price just stick around the Ichimoku cloud there, not really breaking it. We might see that slowly retrace a little bit higher towards 143. In terms of potential breaks here, could we break below the Ichimoku cloud? If there's actually a daily close today below 141, then yes, it will actually break below the Ichimoku cloud. If it doesn't break and it continues to drag towards 143, that 142 would be the next level to watch out for if there's actually going to be a transition for the dollar Japanese yen. Now, unlike the dollar index or the Euro USD or the Pound USD, where it actually has transitioned into an uptrend, we actually haven't confirmed a transition to the downtrend for the dollar Japanese yen. Number one, we've got the Ichimoku cloud. We're actually still within the Ichimoku cloud. If you're not looking at Ichimoku cloud, then you actually need to pay close attention to the support trend line that we have since May. We haven't seen a daily close below that. If there is a break below that support trend line, there's also one more support to test, which is 138, to confirm that trend change. So we don't have that. That's why I say I did mention this on the outlook on Monday. For the dollar pairs and the yen crosses, you need to treat them as two separate things right now. They're not really correlated or anything. You might look at them as potentially correlated. They are not. They're kind of really off from, if we take a look at the trends, they are actually a little bit off because we can take a comparison on the dollar index. Right, this is below the Ichimoku cloud. Are we projecting a little bit of correction to the upside? Yes, it's normal. What the market is doing this week, that's pretty normal. Are we done with that correction? We don't know. Right, if there's something dollar negative today, which is the FOMC meeting minutes, that could end whatever correction it is, and we would consider this correction to be a normal correction because it's very close to 38.2%. So if we're taking a look at the momentum on the dollar index, is that it might actually go back down below 20, and that could trigger further run to the downside. Next support would be 105. It's just that right now it's not ideal. We don't have the ideal correction for the Euro USD, the Pound USD, and the dollar index. But hey, if that's what the market gives, we'll take it as it is. I do have my preference. I want to see a little bit of a deeper pullback. I would get a better price, but if it doesn't give me that pullback, then I'll have to trade with whatever the market gives. Okay, so for the dollar yen and the dollar index, as a comparison, the dollar yen is not below the Ichimoku cloud. The dollar index is below the Ichimoku cloud. The Euro USD is above the Ichimoku cloud. And the reason why the Euro USD is a little bit more correlated than the dollar yen and the yen crosses, the yen crosses has been moving very differently ever since the Japan's MOF intervened in the market, right? In terms of the weighing on the dollar index, 60% of them is actually going to, I believe it is 60 or 40% is actually Euro USD. So this is going to be an inverse correlation between the Euro USD and the dollar index, right? So, but this could confirm a few things. In terms of how far the correction is done, it's very close to 38.2. It has actually done 108. I think it has actually done 108, but let me just double check. Yeah, it actually did came to 108. So in terms of correction, could we call this as a done correction that's actually done for now on the dollar index? Yeah, that was the previous support for August till September. So that could be tested as a resistance right now. My projection is for a potential towards 109, but if it does get rejected at 108 right now, then yes, it would actually fall into the category of this being tested as a resistance. So previous support currently being tested as a resistance, that would be a cue for further drop on the dollar index. Again, I'm a little bit more bullish on the Euro USD. I don't know what's going to be the trigger, but if I think the market is anticipating a more dovish FOMC, and if we do get that dovish FOMC tonight out of their meeting minutes, we could get a little bit of a better understanding of what they're going to be doing in December. So today is actually that day. Could it pivot today? Yes. If the FOMC becomes dovish, it could actually change the trajectory of pretty much every currencies until end of 2022, or at least until the next meeting comes in for December. But then from the FOMC meeting minutes tonight, we might get a little bit of a peek at what they're going to be doing in December. So do you think the FOMC might still be hawkish? Because I read some articles that some Fed members are still supporting a high interest rate. I think basically all of the FOMC members are supporting the interest rate, the higher interest rate, because that's the only way out to fight inflation at this point in time. So I would kind of disregard those comments because it's kind of redundant. We do know they are still going to hike interest rates. We do know that. What we are looking at from right now, it's any clues on how big a hike they're going to be doing. So if they say, we are going to reduce the interest rate hikes to potentially 50 starting from December, that's no longer being hawkish, because then it will just be like what Bank of England does or the ECB does, right? Maybe they're closer to their terminal rate, like the Bank of England, but it's no longer a thing to call the FOMC hawkish. To call FOMC hawkish is they are going to hike again aggressively by 75 basis points. That's your cue that the FOMC is still going to be hawkish. So yeah, the Fed members are going to say they're actually going to state the obvious. Inflation comes down a little bit from the last CPI numbers. Doesn't mean anything much. Doesn't give you any confirmation. We basically need about 2-3 months of dropping CPI to say, yeah, inflation, hiking interest rate is working. Inflation is coming off a little bit. There could be two potential there. They could continue to be hawkish and over tighten the economy, and then that, that could bring inflation down a little bit faster. But on the flip side, over tightening could kind of mess up with the whole economic growth. Okay, so the balance, it's really thin there. But yeah, it's not the Fed members that determines whether or not they're actually going to be hawkish. They will continue to hike rates. So when they say that, that's not really a sign that they are hawkish. All right, so dollar CAD was already explained. The dollar yen, again, we don't have any divergence at all. We don't have any hidden bullish divergence or whatever, at least not on the dollar yen. If you compare it on the August low, then we could, but then I think that would be picked up on the weekly, not on the daily, right? The August low is actually going to be picked up on the daily. So yeah. You think Euro AUD is going to break the range? Euro AUD, sorry. Oh, that's really messy. On what time frame for the Euro AUD? I think daily we're still a little bit far, unless we're talking about the hourly time frame. But then your projected target so far away at 1.5850 is irrelevant on the hourly time frame. I don't think we actually have a range on this one. We do have, oh, right. I see that. It's not really a significant range on this one here. This is going to be at about, sorry. Yeah, 1.55. Starting from 1.5550, I would adjust this to 1.5550. All right. So if there's a daily close above that, can it go up to 1.58? We don't really look at that towards 1.58 at this point in time, because technically you still need to keep an eye out on 1.57. So estimate your range carefully on this one here. Do I think the Euro AUD is going to break? If there's a run up on the Euro, yes. If the Euro goes back up above 1.05, then yes. I think we might see that break happen on the Euro AUD. Are we borderlining on it? Yes. I think because one more daily close is actually going to take this above that resistance trend line that we have here. See that? There's actually a resistance trend line on the Euro AUD. A daily close above that resistance trend line is likely going to break everything and see the market move towards 1.57. So in gold, it will go down, and for the stop loss is at in 1.1750. Look, I'm basing this on the daily projections, right? This is going to be different because on the daily, our stop loss is going to be a lot bigger. You see what I'm saying? Let me just zoom in a little bit. Do I assume that gold's going to go down? I always assume gold's going to go down, right? The more FOMC hikes, the more gold should go down. And I've always been bearish on gold. I never had anything positive on gold. So if we were to go on the daily time frame, your stop loss would actually be at 1770. 1770, that's your projected okay stop loss. If you put it at 1750, you need to adjust your target accordingly. All right. Whether or not it goes down, that I don't know. My job here is to figure out what my risk is if there is a potential trade. Whether or not to go long or to go short, I prefer to go short on gold. But in terms of stop loss, your minimum stop loss is going to be 1750. Your potential target is going to be about 1725. Do you want to take this trade? Feel free to decide on that, because this is not a small stop loss either. But yeah, do I think it's going to go down? I think it's still going to go down. For the stop loss, it's 1750. Yep. What's your stochastic setting? Can you tell? Stochastic settings, it's always going to be 1455. All right, someone answer that for me. Thank you. Aussie USD failed to break above 66 cents. I think this is probably because of the Aussie New Zealand. Right, Aussie USD failed to break above 66 cents. We don't have anything higher than this. So we actually have something on the Aussie USD on Monday, I believe. So yeah, this is what we saw on Monday. So I think that key level was whether or not I actually transition above the Ichimoku cloud. Does it transition above 66 cents? It has actually. It is already above 66. We are trading at 66.50. You mean 66.60? Do you still want to hold Aussie USD for this one? Completely up to you on the Aussie USD. As I mentioned, for the Aussie USD is actually going to be a little bit unique. I think the daily 66.60 is going to be there. I expect this one to be more range bound rather than a trending market. So I'm not really holding anything on this one here, just because if we take a look at the correction on Aussie USD, can't go on the hourly on this one, unfortunately. But yeah, key resistance to watch out for is actually 66.75 to 67. As long as it doesn't transition above 67, it's not going to be in an uptrend for the Aussie USD. Could it fail at 66.75? It could. Do we take that as a potential yes on a failure? Yes. But consider this is actually within the Ichimoku cloud, so your your potential for this one to trend to the downside is very minimal. Potential for this one to transition back above the Ichimoku cloud is probably higher, but in either case, it's actually going to be choppy on the Aussie USD. 67 short sell. Yeah, if you're still short selling on this one here, just keep an eye out on. Look, if you short sell this, where are you going to be targeting? I believe you were asking me this before in terms of targeting. You were looking at 62 or something. Like this on the daily, it's my concern right now, because if this get absorbed back below 66, that's where it could potentially go lower. I think you were aiming for about 62 or 63, I believe, if you were asking this on Monday or last week's, if I'm not mistaken, because I still remember this. In terms of key support, we do keep an eye out on 64 cents, right? Does this become a range-bound market condition? Not yet, because we actually haven't come back down below 66 cents. So we're still looking at 67 as a potential resistance for this one. If it does break above 66.75, 66.75 to 67, if it does break that potential range, then it could transition into an uptrend. By then, you will lose out on your short trade. So I'm not in for a swing short on the Aussie USD. Never in. Consider that we actually transition above the Ichimoku cloud. Right now, we could just be going inside the cloud, but it's not really a short for me. I'm not okay for that short. So if you have a short on the Aussie USD, I believe you were asking for a break-even point. Can you move it to break-even? I think that was the question. Correct me if I'm wrong. I'm just trying to remember if you are the same person that asked this. But yeah, if you move it to break-even, leave it as it is. Don't even bother changing it. Okay, so let's quickly jump to Bitcoin. It's look, I think we talk about Bitcoin. There's nothing really much to talk about Bitcoin, because my view on Bitcoin, I always assumed that 2 years was pretty much wasted on the market. That wasn't where the normal price should be. Right now, where we are, that's closer to where it should be. How far down it could go back? It could crash to 12,000 for all I care. That's basically, kind of the fair value for Bitcoin. The whole FTX thing going on right now, things just get a little bit funny every single day with news coming out. on that. But yeah, Bitcoin. I don't think you should be. Just be mindful on Bitcoin. Can it go down even lower? Are we really below 16,000 at this point in time? It's a little bit overextended. Can it go down to 12,000? Yes, but how far can it? How long does it take until we go down to 12,000? Because that 12,000 level is not detected unless you look at the weekly time frame. And you're basically making a comparison before the whole market gets a little bit funny with all the hype during COVID. All right, so let's talk. Aussie re-enter for area for Aussie sell on the Aussie New Zealand on the hourly time frame or on the daily time frame. Because I want to wrap up with oil, so I'll do all the other currencies first. I would assume on the hourly time frame, yeah, for the Aussie New Zealand. Should you be going for a re-entry on the Aussie New Zealand? Right now, no, not yet. We did have that spike from the RBNZ hiking 75 basis points. I think that was really aggressive. So the thing is, if you take a look at the early time frame, this is a current fib, and it's all within one candle, right? In terms of correction, can we use this as a potential correction? Yes, we could. Where are we assuming that correction to be? We are probably going to be looking at around 1.08, which is closer to 61.8%. Okay, so if there's a rejection at 1.08, then that's your cue to potentially re-enter sell on the Aussie New Zealand. But until that happens, this is currently progressing higher, so I really don't want to go short on the Aussie New Zealand as of yet. Yeah. So on the early time frame, if you traded the Aussie New Zealand, I don't think it's quite time. We might see price pull back up, closer to 1.08. If it fails at around 1.08, then yes, that would be a re-entry point for that. How do I calculate it? Oil pips on oil. Okay. That's actually going to be a tough one, because I think you guys are calculating pips differently from how I look at stuff for oil. But I always count the dollar. So I would assume if we take a look at this 75.89 to 76, for example, that would actually account for 75.89 to 76. That would actually account for not 11 pip. It would actually be 11. So I don't know how does that translate on your side. But anyway, we can look into that on Monday, because I'm actually curious how we actually look at it on the MT4 as well. Because I trade the futures differently. I'm not trading the CFD futures specifically on oil. I trade oil differently, but our view is going to be the same. Now, on oil, this was discussed on the Telegram channel, I believe yesterday. We were looking for something yesterday. Some were actually eager to jump back in on oil. We were looking at a potential morning star for oil. I think now it's probably the time to calculate that morning star. And the easiest way to calculate that is actually just to measure the body. If we actually have a 50% close above the first candle that drops down. So this is a little bit tough, because if we take a look at this, we barely covered that 50%, right? We literally just barely covered that 50%. So, pip count, I believe a dollar movement should be 100 on your pip count, I believe. Right. Anyway, for oil, that's very, very close. Now, this is something that we're waiting for. A lot of you guys were probably jumping in on this one here. So there was actually a question on what's really happening with oil. Yesterday, I think there was talk about the a production cut by OPEC. there were rumors that OPEC is actually going to increase the supply output, but in reality, they're actually potentially going to cut production for oil. That was basically it. That's driving oil a little bit. We have a little bit of a drop, and the explanation to this for those guys now in the Telegram channel, which I gave yesterday, we saw a little bit of a weaker demand for oil, just because we have that COVID issues, COVID lockdown in China, right? That kills off a little bit of the demand for oil for industrial purposes, right? And then there was a story that because of this issue that you know no because of this issue they are actually going to cut production. The OPEC it could potentially cut production output because of the decreasing demand for oil. Does that make sense? Because the demand drops, they don't need to they don't need to increase their production. They need to cut back on the production because they want to maintain a higher price on oil. That's basically the whole logic behind that. Now we do have 77 as a potential base. We're actually looking at between 75 to about 77. There was also a warning yesterday, which I didn't actually follow up, but someone was saying be careful of a potential previous support that could turn into a resistance. That would actually be at 82, and that's basically the current situation that we're looking at. Now, people are asking, should we be holding on to that position? Because I know a lot of you guys were enjoying that gain from last year's October, November. But is it time yet? It's a little bit too early to call for this one. I would just wait it out a little bit. I don't have any strong indication or anything like that, just because the stochastic is technically still below 20 on oil, right? In terms of how strong that 77 bounce, again, that 77 bounce that created that doji looking hammer, it's really spurred out by rumors in the market. So we don't actually see a factual demand or anything like that. The only thing that could trigger oil to the upside for sure is that if OPEC cuts their production output. That's basically it. The YouTube transmission on my laptop is a minute slower behind the one on my Android phone. Look, look, Benga, I'm experiencing the same thing. That's probably why when we start, I always had that little bit of a pause, because I'm checking it on my computer and you guys are probably hearing it live, but there's actually a delay about a minute on my side. So yeah, so there is that delay. All right, for oil, Judy was asking for oil. I would say hold on a little bit if you're planning to go with what we did last year. I would hold back a little bit until we have that confirmed production cut from OPEC. Then yeah, that's probably the cue. But in terms of how it is technically, we're not really above the Ichimoku cloud. We don't really have anything to gain at this point in time. We are just assuming that, hey, you know what, there's a bounce off 77. Short-term traders, yeah, that's completely fine. But if you are going to be holding your positions for months, like how we did it last year, I don't think it's quite time. I would say it's a little bit too early. Don't just jump into conclusion, because we have projected lows on oil. We actually do. We got 72, and then we've got 70. If you're wondering and you're not following what's going on with oil, 70 is the level that Biden says the US will actually refill their oil reserve at. It's going to be at $70. So $70 is going to create a floor on oil. That's basically how it is. I learned to sell 0.01 lot Bitcoin USD at 68.20. 6 to 80 have not come out in the market until now. In reversal, and that's what made me a swing trader until now. Look, I've been really, I'm not into crypto. You guys figured that out, because it's not that I don't like it. I don't believe in the asset. That's the thing, right? Do I hold some crypto? Yeah, I do. It's for fun. I'm not really investing seriously on crypto. Some people can trade it in and out. It's just that for me, because I don't like the volatility that's being given. Maybe it's easier for you guys that don't have that, information on the mechanics of the financial market, right? Because what we know about the financial markets and then pouring it into the cryptocurrency market, the crypto market is actually looking at things differently from how we look at things. So you guys might be able to pick up new stuff that you guys can easily adapt to and adjust to it. But it is going to be tough for an old timer like me. But yeah, if we look at how the whole movement during COVID, how it, how a lot of people get scammed out of it, how many more coins are dead, the how many altcoins that was created, how many altcoins was a hype. I don't really put too much faith on it. First time watching live, are you going to trade? I don't normally trade intraday, so you're not actually going to be looking at me placing that trade, but I'll give you the guideline if you want to. If you want to watch someone trade live by forcing you to trade and copy their trades, I'm sorry, man, that's not me. So yeah, it's a really hit and miss. Depends on what you guys want. But if you want me to place a trade within the same hour, if there's a trade to place, I'll place that trade. But look, that's not my style of trading. Okay? Does that answer it? Because I think a lot of people were probably wondering about that as well. Just by nature, I'm not a swing. I'm not I'm not a scalper. I'm not really an intraday trader. I'm a swing trader. So I'll give you my point of view. All right. If you have any position adjustments, I'll look at it from a technical perspective. If this is your first time joining in, then welcome. But I'm not the kind of guy that says, "Hey, you need to trade this now. This is your stop loss. This is your take profit," and then what? Not be held responsible for it. I think I have to give out an outlook on Monday. I have to talk about the market on Monday. I have to talk about the market on Wednesday, and I have to give you guys education material on Friday. So I much prefer to keep my reputation alive rather than giving you random trades to trade, but with lower probability, which doesn't make sense, right? But yeah, that's my feedback on that question. All right. Time's up for today. Again, FOMC meeting minutes should be coming out in 4 hours time. If you guys want to know what we are looking out for, the first 10 minutes of this webinar is what you're going to be. It's what you want to review. There are 4 potential scenarios for tonight's FOMC meeting minutes. Right now, we are looking at a higher probability of that FOMC meeting minutes being dollar negative. If the word slower pace of interest rate hikes is mentioned, and if FOMC is reluctant to say that they will continuously hike interest rate to fight inflation no matter what, if they start removing this wording and they start adding slower pace of interest rate hikes, that's going to be dollar negative. There are two other scenarios that could be dollar positive, but do review it. I did talk about this in the first 15 minutes of tonight's session. All right. Thank you all. Stay safe. I'll see you Friday. I think we have a continuation of the trading psychology on Friday. But yeah, other than that, good luck with your trades, and I'll see you Friday.